Hello guys, Daniel here and welcome back to my YouTube channel. Today we're going to talk about order blocks and how to trade them. So first things first, what is an order block? Order blocks are price zones in the chart whereby big institutions tend to place their buy or sell orders. It is an obvious footprint left by these top players where money can be made. Now, there are some rules that you need to adhere to when you want to trade order blocks. The first rule is that order block that you're going to be looking to take the trade from must cause a break of structure, or you should see that there is a change of character occurring on it. Do you understand? Two, it must be unmitigated. When we say an order block must be unmitigated, we basically mean that that order block could not have been tapped into, or price shouldn't have tapped into it before you try to take a trade from that order block. Do you understand? Else that order block may not hold. Normally, when an order block has been mitigated, if you try to take a trade from that order block again, it's not going to work out beautifully. Do you understand? You may tend to hit SL when you trade mitigated order blocks. Do you get the point? Now, an imbalance or a gap must be present. Some of you may be thinking, what gap? Basically, it could be a fair value gap. Do you understand? So an imbalance or a gap must be present. It's one of the factors that ensure that this order block is really solid to take a trade from. And then it is also the last candlestick prior to the impulsive move that breaks the structure. Now you can see that I have put a bullish illustration of a break of market structure and then an order block over here. So assuming the market's in an uptrend, whereby you're getting a series of higher highs and higher lows, higher highs and higher lows, right? Once price break this higher high over here, we tend to see our break in market structure. Now, when you look to the area around here or somewhere around here, you should see that price has created some sort of gaps in the candles, depending on the momentum that you're seeing. Normally, when you see strong momentum, it means that the gaps have been created in order. So basically, you're gonna wait for price to drop down into the level whereby you have mapped as your order block. Wait for it to tap into it, then you take a trade from here, and then you hold the trade all the way till the high that was created initially. That will be your take profit level. But many a times, when you take the trade and you feel like you can secure halfway through, you're fine. But full TP is always at the higher high that was created before the pullback that can step into the other block. That makes sense. Okay, now how it works, okay? It works well when the market has a clear sense of direction. So when the market is trending nicely in an uptrend fashion, you can see it give you clean price action and stuff. So once price break structure, you see that it's able to come back and retest it and all that. Yeah. When the market has a clear sense of direction, trading the order block is so smooth and cool, and you can make a lot of money while doing so. It also works best when the market is volatile. So sometimes you can see that when there is news or NFP and all these kind of things, when price gives you this move, it can give a long impulsive candle, boom, and that candle's length may be somewhat like this. Do you get? And then it will give you the next set of series of candles. So when you see momentum like this, it's telling you that there's some sort of volatility in the market that was, that is indicating that the buyers are really strong in here. So once the price or the market comes back to your order block and you see that, oh, it's coming, you know for sure that this trade is going to hold, especially when your order block has not been mitigated. Do you get it? So when when the market is volatile, when there's a clear sense of direction, it works really well. And then let your focus be on the most recent order blocks. Let your focus be on the most recent order blocks. Don't go and look for an order block all the way in 1998 that I come to trade it. I beg. It's too far away. So focus on the most recent order blocks. So there are time frames you can focus on. Normally, when I'm doing analysis and then I'm plotting my order blocks, I tend to look at the H4, then I go to the 1 hour, and then I look for my BMSs, then I also look for my change of characters. Do you understand? So I would delve into the chart right now and then give us some beautiful illustrations of whatever it is I'm talking about with regards to order blocks. So I think the first pair I'll go on is BTC USD. Yesterday, I saw a solid trade on BTC USD. So currently, you can see that on the higher time frame, price has been giving us a series of lower lows, lower highs, lower lows, lower highs, lower lows, and then lower highs. Do you understand? So you can see that there are breaks of structures happening all the way to the downside, happening all the way to the downside like this. Okay, so I tend to take my trade somewhere around here. But then before I took the trade from here, you can see that it looks like this was a break of structure. So there is some sort of zone around here whereby price was doing its own thing. Okay, so initially, when I saw price get into this zone, I was looking to take a sell trade. So on the 1 hour time, I drew the zone from the 4 hour. So I went on a 1 hour time frame trying to see if I could get an entry criteria. So when I got here at the time, price was around this region. And then I went on the 30 minutes time frame to see if I can get my change of character. I saw the change of character. Price gave it around here. Okay. And then it literally went back to the other block that I wanted to trade. And then I got my trade from here all the way to this area. So I thought, oh, okay, since it has happened, it's going to continue going down. But price actually came back to retest this zone again around here before dipping. And the reason why it happened that way was because, one, you can see that we have another BMS over here. I'm going to label it just so it can be clearer. Okay. So we have the BMS. Let me stretch the chart a little bit here. So we have the BMS. So price give it a break of market structure. You can see there are some sort of gaps in between around here. There's a fair value gap over here. You can see there's no gap in this region because every single time price gave a gap, it filled it, gave a gap, it filled it, right? So the only place that had a gap is around here, and then this is the other block. So you can see price tap into this other block. It hadn't been tapped into before. You didn't see any third candle pull all the way up with the wick to come and tap into it. It didn't happen that way. After it gave the BMS over here, it pulled all the way up to tap into this other block before it did what? It sold up. So you could be able to catch the move from here till here. And that is a very solid trade. Mind you, when you're taking trades, don't be so eager to expect that to hit your full TP, which is this line. So when price moves about 90% from your order block, so where your TP is, you see 90%. I've customized my Fibonacci in a way that when price gets to 90%, I'm looking to exit my trade. When it moves about 90%, just close your trade. Don't expect that to always hit your TP because you wouldn't want to have this trade make you about $20,000 and then you leave it to pull all the way back up to hit your SL. No. When you make about 18,000, 15,000, you can secure some profit. It's really good. All right. So that is it. So this trade eventually reversed this thing. I was waiting. Then I saw that within the week, it gave a very solid impulsive push to the downside. So you can see that I had already mapped the chalk again, but let's just focus on this area. So you can see, according to the order flow, we're still getting lower lows, lower highs, and lower lows. Then what happened? I plotted this area as my break in market structure. Price sold all the way down, went all the way back up, tapped into the other block around here, which is the last candle that began the whole move that broke the structure. Then you can see that there is a fair value gap over here. Then there's also another gap right around here. So there are two fair value gaps present. Then there's my order block. Then price taps into it and then it's sold off. And like I said, when it sells off, just target somewhere around 90%. Around 90%, then bam, you're out of the trade. Though this trade has potential of selling some more, at least when it sells to 90%, just secure profit. This is not a bad trade at all. It's a very good trade. And this thing I'm teaching, I believe you guys have been blessed and touched by it. Please like, share, subscribe to your friends so that they can learn from me as well. Okay. Yeah. So basically, that is it. It's not so difficult. Do you understand? So you need to get other blocks that follow the criteria that we listed. Okay. You need to find other blocks that follow the criteria that were listed. Let's see. I want to draw. Uh, yeah. So basically, that is it. Okay. That is it for the other block, right? So it must break structure. It must cause a change of character. It must not be mitigated. There should be an imbalance or a gap present. And there's the last candlestick prior to the impulsive move that breaks the structure. And it works really well when the market has a clear sense of direction. So basically, that is how you trade other blocks. Do you understand? So the example or scenario I gave you, this is a bullish one, but then when you went on the chart, you can see that I had given one for a bearish market. But let's see if I can find one more for um, a bullish market so that you can learn from that as well. So where do we begin? Good. Okay. So there was a time I took a trade around this region. What did I see? I had already mapped out my higher time frame analysis. So price was playing within this range over here. So over you can see that we have something like a break of structure over here because the market was giving a series of high highs and high lows, high highs and high lows, right? Then you can see that there's some sort of zone around this region. Okay, let's plot this one too. Okay, so there's some sort of zone around here. There's a sort of zone around here too. All right. Then you can notice that price gives a change of character around here. After the change of character, you can see that there's a gap in here. So I can see my fair value gap right here like this. And let's put it here. So after the break, I'll label this place as my what? My change of character or break of market structure, whatever. Then I will draw my order block zone. So once the order block zone has been drawn, you can see that price took some time before selling into this region. So that is when I begin to go to the smaller time frame to see if I'm going to see something else that will trigger me to take this trade. Because the fact that price took a long time before coming down doesn't mean that I should just jump into the trade because it has come into my zone. I want to have the most accurate trade entry ever. So I go on the 15 minutes time frame. Okay. Then I will look to see how best to go about taking the trade. So you can see that if somebody jumped in on the trade because it's tapped into the zone, the person will be what tagged in to go out and stop out. But let's of course you have a big SL. Then you can see that there is a lower high over here. So I would map this area whereby I'll be expecting my change of character. Then you can see that there is some sort of gap over here. Right? Then I would map this area as my order block. But then this other block, I would probably draw it on the 30 minutes time frame because that is where I like taking my zones. So this will be my order block on the 30 minutes time frame. There's one thing I noticed about trading order blocks. Meaning sense when you trade order blocks from 30 minutes, it will tap into the 30 minutes one and then to go. Do you understand? So 30 minutes is in between 15 and 1 hour. So when you take 30 minutes order blocks, meaning majority of the time you notice that your trade tends to hit your 30 minutes order blocks more. So sometimes you may draw another block of 15 minutes time frame. You may be wondering why price didn't tap into it. But price tapped into the 30 minutes candle because 15 plus 15 is 30. And that 15 minutes order block candle that you're looking for a price tap into it is contained within that 30 minutes candle as well. So price will basically respect that 30 minutes candle more. That's one thing I've noticed as per my trading experience. Sometimes it happens with the 1 hour, but the 1 hour is not all the time that it may tap into the 1 hour order block, but it may go deeper a bit inside the 1 hour. And that is why I tend to stick with the 30 minutes. Even with the order block I drew in the fair value gap that I drew in the 15 minutes time, you can still spot your fair value gap or your imbalance around here. So the gap is in this place. Then what does price do? Price taps into your order block and then what the trade begins to move impulsively. then your take profit level would be around here. I took this trade. I made some good killing on this trade. So order block, your SL is under your order block, then you target here. And like I was saying, 90%, when price moves 90% of your order block, you can close a trade. Do you understand? You can close a trade. If it gives you more entries and the order flow is still continuing, what do? You catch this trade, then what? You swing this one to all the way to your next take profit level, like this, and then here. So you'll be making a pool 1:4, 1:3, 1:8, 1:9, just following the order flow and knowing how to go about taking your order block trades. So, ladies and gentlemen, this is your boy Daniel Forex. I believe you were touched by watching this video. I believe you've learned something fundamental in this video. Please like, subscribe, and then share with your friends. Okay, let's grow this channel, and then I just hope you guys can make money while trading forex. Bye.